What is going on, everyone? Welcome back to the channel, and in today's video I'm going to be talking to you guys about MyForex Fund Phase 2 and how I passed the evaluation. Now, unfortunately, for some reason, as you guys are going to see, I'm in the back office and I was trying to kind of show the stats during that time, but for some reason I think MyForex funds, they don't show it for some reason. It was weird because if you've seen the first video when I talked about the 100k phase 1, the statistics were there after I passed the challenge. Now, so what I ended up doing is kind of just talking about the liquidity pool concepts that I use to trade. And again, if you haven't, I know it was a very highly requested video, so I thought, you know what, this would be the perfect time to kind of put the liquidity pool concept videos, with the phase 2. But I will show you guys like the back office of me passing the challenge, hitting the profit target. Also, I will show you guys like the certificate, so you know, like, all right, this is like legit. It's not Photoshop or whatever some crazy people think that you'll do. But yeah, man. Also, before we get into it, guys, I will be launching my Train and Trade Academy that will be going live tomorrow on Friday, June 24th. Now, if you are interested and you're seeing this video currently, or you're seeing this video tomorrow on the launch date, I will be posting a link in the description below. It's going to be straight to my Telegram channel. In my Telegram channel, that's where I'll be posting the link to the website. I go live, and it will be going live on Friday. So if you guys are interested in that, the full course curriculum and everything that comes with the academy will be posted in the Telegram to tune in. Also, it's going to be like a one-time fee for $150. After Friday, it will be $397. So on launch date, just to show my appreciation to everyone who's been like showing me love on Instagram, Twitter, YouTube, I will post it for a very low barrier to entry, $147. It'll be lifetime fee. There's no recurring subscription, and you guys will see what comes with the academy once I post the link. But without further ado, we're going to get into it, and we're going to get into the charts. What's going on, everybody? So I wanted to make the second part of the MyForex Fund Challenge. If you guys haven't already seen it, I talked about MyForex Funds Phase 1, and I showed you guys live trade. And if you haven't watched that, I will put a description in the link below. Now, I'm going to go over here. It's unfortunate because I'm not sure why they don't have the statistics for the Phase 2. I know they had it for phase 1 once I passed the challenge, and I'm not really sure exactly why it's not available. But so I wanted to just kind of show that I did end up getting the 100k account. I ended up hitting the profit target at $5,007.53, and it says, as you guys can see, the account status was passed. And then I'm going to click here just to show the certificate. The certificate is right here. And now obviously I've transitioned into a live account with MyForex Funds. And also, if you guys are interested, I will post a link in the description below of MyForex Funds. It is a referral link, so I will get any kickbacks. So if you guys want to support the channel, feel free to use that. Now, because we couldn't go over the statistics, I thought I'm just going to make this into a educational video where I'm going to talk about the liquidity pools. So it was a very highly requested video, so I thought about, let me just put it in here. But I just want to show you guys that, phase 2 was passed, and now I've transitioned to a live account, and I'm going to go ahead and show you guys now a liquidity pool video. So I'm going to start off by kind of illustrating what liquidity pools are, right? So liquidity pools are essentially places in the marketplace where the market has buy stops and sell stops resting. It's essentially an area in the marketplace where there's going to be a lot of transactions that are going to take place. So for example, if the market makes a swing high, typically this high, especially if it's a significant high, which I'll talk about later, if this is a significant high, there's going to be orders resting above it, because if the market goes up, if anyone was short on this drop here, they might puke or have their stops above here, or if someone wants to look for a breakout above this high, they'll have their orders to buy right above it. So this is an area where the market has a lot of transactional implications around these price points. Now, the very key specific price points that I personally look for are the following. I'm going to label out here for you guys. So we have prior day highs and lows, prior session highs and lows, prior weekly highs and lows. Now again, guys, if you guys want an in-depth description with liquidity pools and the way I trade with the full foundations of everything that I utilize, like if you guys seen in prior videos, I will be launching my Train and Trade Academy this Friday. So pretty much this video will be uploaded today, which is Thursday. Tomorrow I will be uploading the Train and Trade Academy. It is a one-time fee of $150. After that, it will go up to its original intended price, $397. And it pretty much comes with weekly Zoom sessions. It comes with the full Train and Trade Academy, which includes all the concepts I trade, my trading strategies from A to B listed. It comes with also bi-weekly Zoom sessions where we're going to have Q&As for anyone who is interested. Just sign. I will be posting the link in my Telegram once we go live. So if you are in the Telegram, make sure to join the Telegram. It will be in the description. But yeah, without further ado, after that little promo, we're going to go ahead and get into it. So these are essentially the highs and lows that I personally look for in conjunction with, let's say, structure or some sort of framework. Because at the end of the day, you know, you don't want to just start selling and this is a big mistake I see a lot of people do, is when price goes up, they think that this is automatically going to be a sell because price took out a high, and then it's really just, you know, the next drop lower before the next push up. So a lot of people might get tripped up by this. So the key thing in remembering liquidity pool raids is you typically want to see a raid. Let's just say, for example, this drop here, and then this is, let's just say this is a specific daily high. Now, what you typically want to see is if price originally was coming from a downtrend, and we have, let's say, some sort of area of supply, or let's say an order block imbalance, something like that. So when price kind of comes up into that region, price is taking out liquidity, but it's also hitting, let's say, an optimal trade entry. So let's say you draw your Fibonacci from here down to here. This liquidity pool is kind of below the 50%, and it was below the optimal trade entry, which is 62, 70, 79. You typically want to see, let's say, a discounted level right there, while the market creates a high, and typically what you'll see is the market start to fizzle out and then possibly start to reverse ultimately to make a lower low. So this is personally this is one way that I use it, where I want to look for a daily high, or for this example, I'm just going to use a daily high. This could again be a prior session high, doesn't really matter, but I want to see this liquidity pool that's resting right under a higher time frame level. So if I see let's say an order block or an imbalance right there, and this was something that was formed in a downtrend, again, just repeating what I was talking about, when price kind of reaches up into it, I want to see signs of rejections, and typically that's going to be a good time to anticipate that this push up was actually a run on stops. Now, what you don't want to do is you don't want to short something that's kind of like in an uptrend, and like, let's say market was coming down, for example, like this, and then price kind of broke, and then you're just trying to short, you know, trying to short like a new high, even though it kind of broke structure and the market is kind of in a reversal pattern. So yeah, you definitely don't want to do that, because if the market is kind of bottomed out and you start to short that, you're just going to get stuck trying to short during a reversal uptrend. But yeah, so let's go ahead and go look through some examples. Now I have the prior day highs and lows in here, so I'm gonna try to show you guys actually an example of this. Let me go through, because again, this is not scripted, so I want to make sure I find a good example. Okay, here's a perfect one right here. So let's say on this day right there, we see that the market took out this prior daily high, right? And it's illustrated by this right here, so I'm not even going to draw out the line. Now, what I typically want to see is price hitting a higher time frame level? Look at it here, right? Price has been dropping significantly for the last few days, and when price ends up pushing above the prior day highs, we run up into this imbalance right there. So that fits our criteria. Now, what you want to see is this kind of break down, and you want to look for a backside move. And people who know me know I'm like huge on backside moves, because I don't like to short on the push up. Now, obviously in this scenario, the push up, if you sold it here, you would have caught near the high. But again, for me, I like to wait for confirmation, and typically I look for confirmations on the 5-minute or the M5. Now, I'm sorry, the M15. So look at how the market kind of ran up in here. The market ultimately pushes, and you start to see that the market has drops in here, And again, let me see if I have the session times. Yep, I do. So now this is going to be the New York session. London session, price pushed up, hit our level, and you start to see rejections here. So you see one rejection, you see two rejections, you start to see price kind of fizzle, and then you start to see engulfing candles take over. And this typically means that all the liquidity that was trapped here, the market makers have kind of done all the work, and now they're trying to push price down to the opposing side. So like, let's say under this specific low, or under all these liquidity pools right here. So that's pretty much the gist of it, guys. It's very, very simple. Again, I don't like to complicate my trading. I literally just look for areas of confluence using all the foundational concepts that I trade. Again, if you're interested in all that, make sure to tune into my Telegram, because I will be posting the link this Friday for my Train and Trade Academy. It is going to be at 150 for a one-time day. Again, it's appreciation for everyone who's been supporting me, man. So really shout out to you guys. But again, the price will go up, as like I just put too much value and too much time into that academy, as well as all the weekly and the bi-weekly Zoom calls that we're going to be doing. You know, 150 is by far a steal. So hope you guys enjoyed this video. If you guys want me to do another video on liquidity pools or order blocks or whatever it is, let me know in the comment section below. Also, if you aren't subscribed, make sure to subscribe, because I do post on here about 2 to 3 times a week, and you don't want to miss whenever I upload, as I always try to give out as much value as possible. So if you guys enjoyed this video, like, comment, and subscribe, and I'll see you in the next one.